The stock market took a massive dump after the overall tariffs announcements, and my favorite semiconductor stocks are down a nice amount. We can see the semiconductor ETF is down roughly 5%, Nvidia is down nearly 5.6, and TSM is down nearly 6%. Now, some many people might say, Jose, why is the semiconductor market down? If you take a closer look at the fact sheet, semiconductor products are not included to these reciprocal tariffs that were just announced. Now, on today's episode, we are going to discuss that. And I also want to kind of take a closer look at what these tariffs mean for the overall market and just share my overall thoughts. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just kind of take a closer look at the overall market. We can see the Qs are down roughly 4.4%. The S&P 500 is down roughly 3.5. Semiconductor ETF SMH is down roughly 5%. Nvidia is down roughly 5.6. TSM is down roughly 6%. Apple is down nearly 7%. Microsoft down near 3%. Google down 3%. So everybody is down. I mean, we can even see companies like Nike down roughly 7.3%. So the first thing I want to do is kind of just share my overall thoughts. Now, this is going to sound like a long ramble, but this is why it's crucial, in my opinion, to be a long-term investor. Long-term investors put money into the portfolio that they don't need anytime soon, that they have a long-term mentality and are not over leveraged, right? And that's what I am. I'm a person who the money in my portfolio is not needed anytime soon. And times like this obviously suck, right? I'm not going to sugarcoat it. I'm not going to say seeing my portfolio down or being going to be down tomorrow, I'm going to be happy, right? That's not the case. But I'm more of an optimistic guy, in my opinion. I'm more of a half full type guy where stocks right now, I don't need this money anytime soon. I am almost certain that the stocks that I have in my portfolio today are going to be much higher in the next 3, 4, 5, 10 years from now. So this is just noise. If I didn't need the money tomorrow, what does it matter how the stock portfolio is moving, right? This is how I'm starting to look. That's how I look at things in the overall market, right? That long-term mentality. Now, adding to that kind of half full, it's like, hey, these stocks that I'm very bullish on, I can buy at a cheaper price than I could have a few days ago, a few weeks ago. I'm not here trying to time the market. And let me just say, I don't believe this is the bottom. And I don't care if this is not the bottom, right? Stock prices can continue to go down. Regardless, I believe the valuations of a lot of these stocks are sitting at super attractive levels. Google's forward PE ratio less than 20, Nvidia's lower than the mid 25s. We can see other big players. TSMC, I believe, is lower than 20 as well. So, as a long term mentality, I do believe a lot of the tech companies that I own right now are going to be a lot bigger, a lot better 3, 4, 5 years from now. We've gone through these cycles various times, and every time that I've gone through these cycles, a few years later, I'm sitting at some new all-time highs. And that is the experience that I just want to share. So right now, I'm going to continue to dollar cost average into my favorite stocks over time and continue to put money to work. All right, so that's enough rambling. Now, let's kind of take a closer look at what's happening. So today on April 2nd, we did kind of get the Trump administration come out with some tariffs. And I'm not much of a macro guy, right? I really don't follow the macro market too much, but it is important to understand what's happening. And if you don't follow an industry that big, I mean, I think this is the great opportunity to use artificial intelligence or AI to help you understand what's going on. So some key things are Trump declared a 10% baseline tariffs on imports from all countries, which will take effect on Saturday, April 5th. Additionally, he did announce target reciprocal tariffs on approximately 60 countries that he identified and the administration identified to contribute to the U.S. trade imbalances. And these trades or tariffs will begin on April 9th. Some specific tariff rates were 34% duty on imports from China, 20% on goods from the European Union, 49% on products from Cambodia, 37% on items from Bangladesh. Now, no one really knows how these tariffs are going to go, right? Many people are just seeing the bearish case and kind of the negative pressure. But it is very hard. It's very difficult to really project how this is going to go in the next month, in the next 3 months, in the next year, in the next 2 years. And that's what the market hates. And this is why the stock market is down, is the uncertainty of what this creates. This has kind of an economic implications of kind of being a gamble that could create some consequences. And again, even artificial intelligence doesn't know what the real answer is. It could have consequences. It could be an economic gamble, but any gamble has a win opportunity as well. So there is a scenario where something like this can end up being amazing for the long term. Now, again, that's not what the market is thinking right now. They're thinking more of the negative pricing or the negative outcome, which probably has a higher probability. And this uncertainty can continue to grow, as obviously this can kind of start a form of a trade war with major US partners. And that can lead to even more and more and more uncertainty. So the overall uncertainty is what's really impacting the overall stocks. Now, we are getting some kind of, so some of the key concerns here are things like inflation pressure, corporate profits, manufacturing, the actual goal of bringing manufacturing to the United States with these tariffs. Is that actually a reality? Disruption in the supply chain and economic slowdowns, as this can elevate the risk of a recession, as maybe there is the chance of things gonna go up extremely, extremely expensive. We have also seen a bunch of analyst assessments about this. For example, Dan Ives of Wedbush mentioned that these tariffs are worse than the worst case scenario. Brett Ryan from Deutsche Bank mentioned that the tariffs were certainly more severe than they had expected. Now, the next thing I want to do is, now that I understand what it means on a top level overview, I want to understand what it means to me as a semiconductor investor. And like I just mentioned earlier on in this episode, we did see that some of these, some goods will not be subject to this reciprocal tariffs. This includes steel, aluminum articles, and auto parts already subject to certain tariffs, copper, pharmaceutical, semiconductor, and lumber articles. So there is some breath of fresh air, or you would think, for the semiconductor industry. Also, though, there is still the uncertainty, right? So right now, these are just the initial tariffs. But what happens when a country comes back and creates maybe counter retaliates with their own tariffs and maybe adds semiconductors on their list? And then what if the United States kind of retaliates back and adds semiconductor to the list of that? So there is that risk that while semiconductors are not directly impacted right now, it could end up being something that happens in the future. So we still have that uncertainty as semiconductor investors. But is that semiconductor uncertainty, or is that uncertainty warranted enough to see Nvidia stock down roughly 5.6%? Now, again, I wanted to understand more, and I decided to go use my OpenAI $200 a month model to try to understand a little bit more, maybe explain to me some of the things that could be impacting as an indirect effect. And again, some of the indirect effects are just kind of the retaliation risk. What happens if other countries retaliate and they start to add their own kind of tariffs to semiconductors? Obviously, the United States has some big semiconductor companies. The other thing is, these tariffs are creating an impact to semiconductor customers. And most semiconductor customers are not your average Joe. Most semiconductor companies, semiconductor components are going on finished goods, right? They go on laptops, they go on PCs, they go on phones, they go on automobiles, they go on everything else. And what if whatever that finished good is seeing export rise or prices rise in certain of their materials, even though their semiconductor product or their semiconductor inventory isn't seeing a price hike, their overall cost of goods is increasing, making that final product more expensive. Now, that final product is going to be more expensive, so there could be the chance that it goes. We can see pricing increase in the consumer side. And if prices increase in things like laptops and things like servers and things like whatsoever, whatever form of electronic good that uses a semiconductor good, if the overall product increases, there is the chance that demands will slow down. There is a chance that this could create a recession, and that chance will, and things like that can have a bigger impact in electronic technology and electronic goods, consumer goods, which then have an indirect impact because if there's a slowdown in laptop sales, the laptop manufacturers are not going to buy much semiconductor products, even if they don't have a tariff, because they don't have the demand to sell these kind of laptops and consumer goods. So that indirect impact, I think, is what's scaring a lot in a lot of semiconductor companies, as a lot of these semiconductor players are really focused in the consumer space. Again, I'm not saying this is the bottom. I'm not saying stocks can't go lower. That's definitely a possibility. But what I am saying is I like to look at things half full. And these are portfolios that my portfolio I didn't need tomorrow or next month or next year or even 2 to 3 years from now, right? In my mentality, that money is not there and I'm not touching it anytime soon. But what I can do is I can put money in there. I can buy shares of companies that I thought were maybe expensive at a cheaper prices. And 5 years from now, Jose is going to be very, very happy that he purchased stocks during this downturn when no one wanted to do so because everybody believes it's the end of the world.